Hi there, folks. Hope you all had a fantastic Jan and smashed it this week. We certainly did over at Discord. In fact, if you followed my weekly plan that I share for free via Substack, then you certainly did too have a good month and a week. The plans were precise and worked exactly how I had anticipated. Now, for this year, I do plan to release similar session insights regularly. And if you are interested, go ahead and subscribe to get notified when I post my next clip. I had promised last night that I would share insights on how traders could have navigated yesterday's V-shaped recovery, so here I am. I am certain a few traders would have been caught off guard, but the market-generated information was present, suggesting a move up was in the making. I'll be talking about how you could have identified them and the areas where you could have participated in this leg up, as well as your invalidation point of your trade. Now, before I get started with Thursday's session, a quick update on my thoughts shared with the team in Discord on Wednesday post the session close. Right here on your left, for folks looking at one way down or think have missed the train, just remember the structure above needs partial repair. That's then the game of rotation before the next leg down. So the first part was very clear on Wednesday end. Despite having closed on a spike down, I was very clear we're looking back for a rotation. Now, when I say poor structure, it is nothing but these two gaps that we left behind at 49.41 and 49.30. Now, what gave me the confidence that these gaps were going to close? Now, that is something I'll reserve for some another day. So, if you folks are interested in joining my Discord and learn how to read markets with a different lens and to stay ahead of the curve, then go ahead and sign up via my website 108altitude.com, and you can use the promo code LEVELUP. Details have been shared in the description box below. So, before we review Thursday's session, let's observe the clues left behind on Wednesday that would be useful for the subsequent session. Now, the first clue on Wednesday was that ES ended with a spike down. Now, ending in a spike down means spike rules will be at play. Now, what's the purpose of spike rules? Spike rules very simply tell us whether this late day move is validated or accepted by market participants in the subsequent session. So typically we are observing for spice base and spice bottom, spice base and spike base and spike bottom to hold. Next, what we also observe is that ES had a weak low left behind on 22nd and 23rd Jan, which means this spike down essentially cleaned that up as well. Now, a weak market typically that is not going to trap you is going to find continuation either in Asia session or London session. Now, it's as simple as this. Neither Asia nor London found any interest below the spike base or the balance bottom. So this was your first hint early in the morning that something else is brewing out here. Now, very simple, we get into the RT8 session and we have the open at 48.83, an important level, and I'll tell you why in a bit. The first move is a spike up, a move up, and where it finds resistance at the balance stop. Now this is where you could have taken your first short entry. Of course, it would be a very good scalp because this was the breakdown and the breakdown got validated, right? First up, resistance. Now we have a push down, but observe what happens here. We look no below more than 10 points below the open. So that is look below, lacking interest. That's the first thing. Second, observe how the spike base is holding. And like I said here, right, think spike rules here. If there's no interest below spike base implies late day breakdown isn't accepted by market participants. Lack of interest finds confirmation. Now, it's not only the spike base where market participants were not interested or buyers stepped in, it is also the balance bottom holding. So you had spike rules and you had balance rules in play. Now, why was today's open important for 883? Because we are also observing gap rules. Now, what do gap rules tell us? Below the open, in this case, sell pressure continues. Above the open, think inventory correction. These are standard gap rules. These are standard spike rules and the balance rules. Now observe how we come down all the way to the bottom, defend the spike base. So that means this late day breakdown is not being validated. That's the first bullish sign. The second, we swiftly go back above the open. That means back above the open, think inventory correction, which means rotation back up. And that's precisely what we get, which is ES starts rotating within the IB range. Now, your first entry is at this spike base. This is the highest odd entry, the best entry, because the margin of safety is phenomenal. You can set your stop loss right at 48.66, where we have the after hours session low. That's your stop loss, and defending the balance bottom and the spike base is bullish. This is the edge of the balance. You cannot go wrong here, most certainly. And even if you do, it is quite easy to flip on any breakdown and retest. Now, that said, this was your first high odd long that you could have taken. You have a nice IB rotation back up. Now look what happens thereafter. We break out. We break out and hold 3 consecutive periods, which is 3 consecutive 30-minute candles, hold above, finding acceptance above not only the IB high, but also the inside day top. So now you have a IB breakout in play. You have inventory correction in play as per the gap rules, and you also have a balance breakout in play. Now that is 3x bullish. So this was your first opportunity to join in the lower 70s, and the second opportunity to join was exactly at upper 4890s, 4900. Now the leg up continues, and observe what happens. ES pushes back inside Wednesday's IB range. Now instantly at that point, the thought has to occur to you, and this is your last possible entry for Thursday, where, oh damn, this is going to fill the gap. Why? Because they've negated the 2 ranges of Wednesday's breakdown. The IB is also recaptured. The late day spike is also rejected. There you go. This is a clear long. Buyers have regained control, and this was nothing but a good pullback to reset. That's all. And there you go. The session continued to closing literally at the highs, near the highs of Wednesday. So that's your inventory correction done. That's your gap filled. Game over. Now, observe what happens today. It's not rocket science, right? We have a breakout above yesterday's high. Now, this breakout was led by your Meta and Amazon earnings, but think about it, right? We first rejected the spike down. We then rejected or found acceptance back inside the initial balance of Wednesday. Now, why is Wednesday's initial balance important? Because that's the session which continued to flush lower. So now we've rejected the entire flush lower and now breaking out above Wednesday high. What does that tell you? Bullseye in control. Tomorrow is Friday. Boy, you want to be long. And we had a breakout, chopped throughout Asia. London had the NFP standard market function trade. It had to flush down for one reason. Okay, I wouldn't use the word had to. Let me say the odds of flushing down were present always. This structure had to clean up. This gap had to fill. Once they flushed down, back tested this breakout in RT8 session. Look at this perfect back test of Wednesday high. Perfect back test right here. Negated the entire flush down. And look at this acceptance. This is beautiful for 2 reasons. Not only did they find acceptance above Wednesday high, but observe, this is the weekly plan snapshot. Buyers will seek to hold the 3-day balance top 49.27, 34, and target 57.63, followed by 72.83. Observe, perfect RTH back test. 1-2 periods held above. Lack of interest below the NFP release low. So you have complete lack of interest. Yesterday's high being defended. Today is Friday. This is where you start going long, because even my weekly said the same thing. Buyers will seek to hold. Buyers are present above this, and precisely what we got, and a swift rally back up, almost worth 50 points on a Friday. So in a nutshell, we had MGI confirming, gave us 3, 1, 2, 3 entries. All we had to do is understand what the spike rules meant, understand what this acceptance or rejection of this late day drop meant, to have that realization that IB is breaking out, balance is breaking out, to have that realization that above open in the event of a gap down means inventory correction, which means we are going to the gap and we are targeting the gap. And thereafter it was all about the weekly plan, which you already had on Sunday, telling you above 27.34 you cannot be bearish. Plain and simple, you cannot. Don't make that mistake. That's the whole point of me telling you to be long. Buyers are there, and there you go. We had a nice 50-point rally thereafter. So from here on, typically we can observe, because Wednesday was a failed breakdown session, we typically observe for 100% extension of Wednesday's range, which takes us to the upper 49.80s or 49.92. You can do the math. So this is all from me. I really hope this helped you. I want you to focus on the importance of the 3 rules I spoke about. It's about your thought process, what happens at each stage, the precise entries you got, and of course, all you had to do was use a 5 or 7 point stop loss. Not much throughout this time. And again, on Friday, how you could have participated in this leg up using my weekly plan. So with that, I'll end this recording, and I wish you all a good weekend, and I'll see you back on Sunday with my weekly recap as well as the weekly plan. Take care. Have a good weekend.